Good morning and welcome to Stock Market Today. It's Monday, August 5th, 2019, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to ChaikinAnalytics.com/today, you can sign up for a free email. You can follow along with this show, get daily stock ideas for you to consider in your inbox every trading day before the market opens. So I hope that everybody had a great weekend. Let's get right back into the mix. A little volatility to close out the week. U.S. equities closed lower on Friday, though ended off the worst levels of the day. For the week, the S&P 500 lost more than 3%. Treasuries were stronger, with the curve flattening. The dollar was weaker on the major crosses after showing strength through much of the week. Gold closed up 1.8%, and WTI crude was up over 3% after a 7.9% decline on Thursday. Leading sectors outperforming on the day on Friday: REITs, consumer staples, utilities, all up on the day. Tech, energy, and materials were your laggards. As we get to the desk this morning, futures are down 1.2%. Asian markets were under pressure overnight. China and Japan were down more than 1.5%. European equities are also under pressure. Treasuries are seeing a rally across the curve. The dollar is extending losses on the major currency pairs. Gold is up 80 basis points, and WTI crude is giving back 70 basis points. And China responded over the weekend to the latest round of tariffs by allowing their currency to weaken and asking state-owned companies to halt U.S. crop imports. So with that as a backdrop, let's take a look at what the S&P 500 looks like. We've now pushed into that support zone that we've been highlighting for the past few weeks on a closing basis as of Friday afternoon. We've been highlighting 2,900 to 2,950. S&P 500 closes at 2,932 on Friday, so closes in that support zone. The lower bound of that support zone is being tested and slightly broken this morning in the futures market. So on a break, we want to begin to look at key retracement levels of that May through July advance. And as we look at that, you can see we rallied from the 38% retracement level on Friday afternoon, but we're now trading back below. A 50% retracement gets you roughly into the 2880, 2884 area. That would be a 50% retracement of the May to July rally. A 61.8% retracement puts you right around 2850. So those are the key areas to now watch on a sustained break below 2,900. RSI is testing the lower bound of bullish ranges. Now, we've talked about this quite a bit. And when this indicator is bullish, it usually doesn't become oversold. It usually finds a bottom around the 40 level, which is kind of where we went out on Friday. We'll see how that trades here this morning. So right now we're testing the lower bound of bullish ranges. Should the market find a way to snap back, remain in that support zone, and the RSI close above 40, that would be encouraging, especially with Chaikin money flow bullish. So to me, that's what we're watching over the next couple of days. We're looking for the market's ability to hold that support zone within above 2,900 and for the RSI to remain in bullish ranges. If that's the case, we should start to think about a stabilization. However, if we break through those support zones and RSI moves into bullish ranges, the trend would obviously be shifting from up to at least neutral with a momentum confirmation. So that is how we're looking at it for the time being. Also continue to monitor Chaikin money flow to see if that holds within bullish ranges. That would be another confirmation point should the market hold back above 2,900. But right now, trading slightly below that 2,900 level. And on a break, we've identified the key retracement levels that are important as far as what we are seeing. Your market in a minute now. What are we writing about in our note to Chaikin Analytics clients today? S&P 500 closes the week in the support zone as trade takes center stage, right? China responded over the weekend to the latest round of tariffs. We touched on that already. The Treasuries rally further, moving the 10-year yield through support. Safe haven buying sends gold higher, and futures, as we said, point to a lower open here today. So after the sell-offs close off the week, let's look at what happened with the power bars here for the major indices. Dow stays even at 7 to 7, down 40 basis points on the day on Friday. 7 bullish stocks or 7 bearish stocks. S&P 500 turns bearish. 97 bulls to 116 bears. NASDAQ was the big underperformer as the tech names came under pressure. 23 bullish or very bullish stocks for 26 bearish or very bearish stocks. Remember, only about 2 weeks ago, that ratio was around 3-to-1. Small caps weakened, although that ratio does remain bullish. Group was down 1.2% on Friday, 477 bulls, 328 bears. Safe haven rally sends bonds higher, bond prices, while taking yields lower. We touched on that on Friday. We'll look at it again here today. According to the Chaikin Power Bar, small cap stocks are somewhat more bullish than large cap stocks, and that's the first time we've been able to say that in a while. Major markets are mixed. Turning now to our stock of the day. Stock of the day is AK Steel, and we're just going to start out by saying, you know, it's auto-generated by the algorithm based on the Chaikin Power Gauge rating, which is very bullish due to very attractive financial metrics, very strong price volume activity, as well as strong earnings performance. Stock does have negative expert activity, however. 20 factors, 5 in each of these categories, give us this very bullish rating. Now, I will say this is a $2.73 stock. I realize that that's not for everybody. If this is for you, the analysis applies. Even if you don't trade these lower price stocks, though, the analysis and everything that we're going to look at is indicative for the analysis and the process that we go through every day. So let's take a look at it. Very bullish stock, just beginning to outperform the market. Bullish money flow above the long-term trend line, which is starting to turn higher. Stock is overbought, and the overbought oversold indicator is now rounding lower from that overbought position. And if we drop down the checklist, we can see a little bit of a mixed picture, right? Strong power gauge rating, great. Relative strength versus the SPY here is neutral because we want to see, in addition to it being strong and outperforming, we want to see some persistence. So until that happens, neutral. Industry strength is strong. Obviously, we touched on the fact that the stock is overbought. Long-term trend, we're above it, and it's moving higher, so that's strong. And we've seen some increased intensity of money flow persistency. So I'd call this a little bit of a mixed bag at this point. If you do trade these lower price stocks, you want to wait for an oversold condition. I can't argue with that. If you don't trade these lower price stocks, though, the analysis applies to the names that you're looking at. So it is a helpful exercise to walk through. Remember to drop down the checklist and run through it, allow you to quickly see the weight of the evidence for any particular stock that you are looking at. Our sector tracker now, movement of the major sectors over the past 5 days, 1 week of trading. Real estate and utilities, only 2 groups to be higher. Move lower in yields, obviously helping the bond proxies, also their defensive properties playing out there. Speaking of defense, healthcare and staples round out the top 4 groups over the past 5 days, although the latter 2, healthcare and staples, are lower over the past week of trading. Materials, comms, energy, and industrials are middle of the road. Financials come under pressure as yields move lower. Tech, latest round of tariffs could really impact tech stocks here. Tech down 4.3% over the past 5 days. As well, discretionary, so 2 of the more highly trade-sensitive sectors of the market really coming under pressure here over the past week, tech and discretionary. Continue to watch how we play out and watch the trends that take shape in the marketplace. Obviously, this is a fluid situation. Our industry in focus today is home builder services. Over the past 6 months, this subsector has underperformed the market by about 55 basis points. So let's call it an inline performer to be fair. Its power bar ratio, however, which measures future potential, is strong with more bullish than bearish stocks. It's currently ranked number 9 of 21 subsectors, and it's moved up 2 slots over the past week. And we can see here 11 bullish stocks for 7 bearish stocks, maybe making the turn here from a relative standpoint. When that's the case, stock selection obviously becomes very important. Stock selection is always important, but even more so if you're looking at a group like the builders here, which is transitioning from a underperformer to potentially an outperformer with a bullish power bar ratio. Take a look at names like Taylor Morrison, TMHC, M&I Homes, MHO, and Owens Corning, OC, all with very bullish Chaikin power gauge ratings. And if we take a look at the group itself, the ETF to track the home builders, XHB, the SPDR S&P Home Builders ETF, we can see a bullish Chaikin power gauge ETF rating and a strong trend. Been outperforming the market since the beginning of the year. Now, the intensity of outperformance has been dampening of late, but still an outperformer. Fund is oversold. Money flow is persistently bullish. We're above that rising long-term trend line, so we can see that this is the type of group where we want to consider looking for bullish ideas and then running through the process, right? The process that we just went through with AK Steel or any of the other names that we talk about here on a given day. I think you can start to go through that process here especially if the market starts to stabilize. But right now, obviously, we're going to watch how the market opens here this morning. Taking a look at what's trending now. Friday's S&P 500 gainers and losers. Newell beat earnings and revenue. Stock higher by 14%. Fortinet in the software group up nearly 9% following their earnings announcement. SEE 7.75% on their print. NBL Noble, very bearish energy name, up 7.4% following earnings. And Western Union earnings sent that stock higher by nearly 3.5%. Loser side of the board, NetApp, negative pre-announcement, sends the stock lower by 20%. Arista Networks, ANET, down 10% following their earnings. LyondellBasell, LYB, neutral stock down 6.5% on their print. And then the bottom two are just part of the tech group that came under pressure with the latest trade news. Hewlett-Packard Enterprise is down 6.15%, and IPG Photonics, IPGP, down nearly 6% on the day. IPGP does have a very bearish shake in power gauge rating. Yesterday's earnings surprises or Friday's earnings surprises: Chevron beat by 53 cents, Sempra misses by 9, ExxonMobil beats by a nickel, Ameren, AEE, missed by 3 cents, and there's that LyondellBasell. We talked about that. Stock traded lower after a 9-cent beat. Earnings, still in focus here. Obviously, trade dominating the headlines, but going to be another busy week of earnings. Bullish names of interest this week: Clack and Tyson, as well as Activision and Cardinal and CBS. Bearish names: MRO and Fox. Take a look at Wynn, Fang, also XEC and JEC. So still a busy week of earnings as we go through earnings season. So a lot to keep investors busy here this week between the macro as well as the micro on the earnings front. So let's talk about the key trends we're seeing as we go through our charts this Monday morning. Gold moves up and out of the consolidation. Here's gold, the actual contract. You can see here after the consolidation, breaking up and out of that consolidation in a move that is confirmed by momentum. Look at how RSI has not become oversold at all, really, over the past year of trading. Look at this. Really not oversold since nearly a year ago, routinely becoming overbought now. So this is what we talk about when we talk about the momentum confirmation to the trend. You can see that gold is above a rising 200-day moving average, and that's helped the gold stocks. GDX, an index of gold mining stocks, trading up here near 52-week highs. So something to keep in mind as you're looking for ideas. Gold continues to see a haven bid, and it's following through to the gold stocks. Haven bidding gold confirmed by momentum, trading up here in bullish ranges for the RSI. Big breakout in treasuries, right? Safe haven buying. As equities sold off, investors were flocking to treasuries. We're taking a look at the IEF here, the 7 to 10-year treasury bond ETF. This is your price proxy for the 10-year treasury in terms of funds. And you can see after going into a consolidation, big breakout on Thursday, following through on Friday through the resistance zone above the rising 200-day moving average. And again, similar dynamic play for momentum here. Look at this. Notice how momentum, remember we talked about staying in bullish ranges? Momentum never getting really much below 50 or 40 and now getting into an overbought condition. That is a momentum confirmation to the trend we're seeing. And on a relative basis, we're on the verge of a breakout relative to equities here for IEF. So treasuries continue to see a haven bid. For those who follow along with my market survival guide, you know that we turn bullish on treasuries back down here around the 109 level. And then crude remains heavy, and that's weighing on energy. Here's crude oil rolling over, likely to test support in the 50 to 52 zone due to obviously the trade concerns as well as just global growth concerns in general. Crude continues to trade heavy, and that's weighing on the energy complex. Here's XLE beginning to roll over once again. Energy remains a weak sector based on the power bar ratios. The two main groups within energy, services and EMP, remain weak from a power bar ratio perspective. So this continues to be a group that we want to avoid. So that's going to wrap it up for a Monday morning. As I mentioned, my market survival guide, head over to chaikinanalytics.com/survival-guide for more information on your weekly action plan for surviving and thriving in any market. I hope everybody has a great start to the week. We will be back here tomorrow. Have a great Monday, everyone.